Welcome to Trading Lounge and the Commodity Futures Report for Wednesday, the 1st of June. So starting with the US dollar index here, this is a daily chart. We're just looking at a very, hopefully simple, as an A and a B and a C wave here for wave 4. We know wave 4s can get complicated, so we need to be mindful of that. So we're really just tracking this first leg down through here. So let's go to the 2K tick chart, the intraday, to have a look at this. So 2K here. So we're coming down for the A wave, and that's what I wanted to just discuss a little bit. There's a couple of different ways we could label this particular first move down here, as 1, 2, 3, 4, 5 for 1 and 2, and then 1, 2, 3, 4, 5 for the third wave. I was figuring we were going up for the fourth wave to go back to the fourth wave of 1 lesser degree and then have the fifth wave down here. But it is possible to have the A wave in here where this wave 3 is, and we're going up for the B wave here at the moment. In terms of trading, we're not really going to do anything. What we decided to do was to short from wave B down to wave C, and then we would go long here, and we would do the opposite in the euro. So yeah, so I'm just going to wait for this to play out here one way or another. Once the B wave will be obvious once it gets there. May even trade that up there a little bit as well, but we'll see how we go with it. Yeah, so that's it in a nutshell. So just to repeat that, we're looking for wave 3, an A and a B and a C wave as wave 4. Now, hopefully that's simple. We know wave 4s can get complex, so we need to be prepared for some complexity within all of this as well. We might get away with it, and if we can see a nice B wave here, well then we will short this C wave here based on having 5 waves here. We can count 5 waves here already, but that would be 1 and 2 here and 3 and 4 here, and then looking at 5 waves, which is okay, but just doesn't have the right look and feel about it for me at this particular point in time. So I'm just going to wait and get it clear here. We don't really want to be involved here. And also too, the euro will be on the flip side. I forgot to do the video on the euro this morning in the euro indices video. So it's the same thing here as well. We're just really going up for an A wave, a B wave, and a C wave up here. Obviously this B wave will come back down lower here. We need to always tweaking things, getting them right. But yeah, so wave C or 4. So we're going to also trade this impulse wave up here, because impulse waves are nice and easy, you know. So let's just see what we get first. So once again, I can call wave A in here, wave 5 of A, or I could look at this as wave 4 pulling back here for wave 4 here, and then going up for wave 5. So I don't know which one I've got at this point, because I really like the sort of 1, 2, 3, 4, 5 here, that kind of move there, you know, which would give us the top of the 3rd, the 4th, and the 5th. But anyway, it doesn't really matter at this point. We're not trading in this space at the moment. We're just going to wait for it to play out, and we'll pick it up in due course. So anyway, that's those guys. Over to the gold market. So with US spot gold here, and we're looking from the 1800 area here. One way or another, it's pretty clear that we got 1, 2 here, 3 here, 4 here, and 5 here. Because we've got 5 waves in that direction, then we're looking for an A and a B and a C for a 50, 61.8% retracement level, and then up here for another 5 waves up here. So possible to look at it as part of the triangle pattern that we've been looking at. We've got a couple of different patterns, but in the meantime it's pretty much going to be this. It could be more bullish as well, but I could only be more bullish than this here is once we do have 5 waves in this move here, anything above the 5 waves, then we could be bullish at that point. But I don't think that's the case, because when I look at silver here, for example, with silver we've been looking for, I can call wave 4 in here, but as 1, 2, 3, 4, 5 here for the A wave, triangle for the B, and then up here for the 5th wave. Now didn't really reach our 38.2% retracement level or the wave 4 1 lesser degree, but we came pretty close. But because because gold has got 1, 2, 3, 4, 5 here for the A wave, and then the A, the B, and the C wave here, well then silver's going to pretty much do the same in any gold stock that, well, not any gold stock, but any gold stocks that are moving in this particular way will follow this particular pattern. So yeah, we haven't sort of landed down here just yet on this, so that needs to happen. And then also on silver as well, we'll need to look at this here as 1, 2, 3, 4, 5 for the A wave here, the B wave here, and then settling into the C wave here, another little low to come in here along with gold. Once that's done, then we can look at a move to the upside for wave 4 and 5 waves up there. So I'll just dull that out there a little bit just to sort of put it there as a second guess, and this B wave needs to come over here and so on. So that's kind of what we're looking at for gold and silver, and GDX will be doing the same thing as well, and gold stocks will be doing the same thing as well. So you can take that to those markets. Alrighty. Over to the soft commodities, we're looking at DBA agricultural ETF here. So we'll also take a quick look at corn and wheat. So we're looking for wave 4 here, nice wave 3, and a nice A, B, C here for the B wave, and then the C wave here. So a nice wave 4, all in all, nice, nice and ugly. Well, it's not really ugly actually. It's quite a nice ABC pattern. So this move up here could be wave 5 of 3. If not, then it's going to be wave 1 and pulling back for wave 2. I'd always thought that it was 3 coming back for wave 4 simply because of corn and wheat. So let's just get a little bit more data in here for wheat. And with wheat here, I mean, well, I've got it coming down. I mean, I'm still bullish on it, basically. But, in here we had wave 1 here, and then an A and a B and a C wave here for 2, then 3 and 4 and 5 here. So we had that 5 wave move here. So I just figured whatever happened over here had to be wave B. But we're mindful of this could be 1 and 2 and 1 and 2. We wanted to be mindful of that. So if that was wave 1 up here, then that was 5 waves here. That means we need to go long at that point. But that hasn't happened. We talked yesterday about a little rally to the 61.8% and then a move down. So that's all occurring. So this wave 1 will eventually just come back over here for that, and we can start to build in a case, for the further downside here. So wheat is not ready. So the ETF at DB Agriculture is not going to be ready either. And then we can look at corn doing the same thing as well. We're looking, firstly, we had 3, 4, 5 here, and then we're looking for a pullback. So this pullback here will come back to this wave 4 of 1 lesser degree and then push up here. Not interested in this, don't want to even trade that long there. But so this particular pattern at this level 8 here, the third strongest number, 1, 5, 8, then 3. So at major trading level 8 here, we're looking at a classic trading levels pattern. So look, in a nutshell, we're not interested in this until this market becomes support on this level over here. That said, we'll be able to buy on this second low here. You could buy on this low if you wanted to here. This will be some sort of A wave, B wave here, and C wave moving down. We could have I'll need to pull that apart to check it, but we're not quite there yet. But another couple of sessions and we'll be there. And then we'll buy this pullback, and then we'll build in the trade from here, and we'll look to the next level to the upside, which will be here. The 900 will be on the way there, which is a medium level. That will give us a little bit of grief, but the market will be sucked up to this 1 here, the strongest number at that point. So just put a grey line in there for a medium level, and there's lots of other levels in here, minor levels and yada yada yada, but we don't need to go there yet. Anyway, this is not ready. So with that and wheat here and the ETF, if you're going with that, so we can look for buying opportunities on these wave 4 previous lows here. Alrighty, so we're not there yet with that, but we can get you in on that. So iron ore, I've been looking at it. This is an intraday chart here, but we're looking at it as well, wave 1, but it doesn't have to be wave 1 or 2 here. But we're looking at this being bullish, but I'll confirm it being bullish once we've got a tested support on the 900 here, or even if it pushes up to, if this pushes up to here somewhere, then double tops in the market are never the end of the trend. Okay, so that means we'd still be going higher at that point, but we're looking at it because there's a good case for the bearish side of all of this. So on the bearish side, we have to look at an A, B, C for the A wave, and then the B wave, and then the C wave up here. But the C wave here, I think there's 5 waves just in that little leg here, so we're pushing up higher than that, so it's pushing up higher. We're long in BHP, Big Iron Ore Company, long in Rio at the moment with a very small position, not long in FMG or Vale at the moment. We could look at this is the XME here, the energy sector. This is the list of the constituents within that. And I thought Vale might have been in that. No, Vale must have been in the emerging markets, which we're looking at. But anyway, this here, just to let you know here, we can see 1, 2, 3, 4, nice wave 4 here and wave 5 here. So we've got 5 waves up here. So we can have an ABC back here already for wave 2. We'll see. I understand this can be, it could get larger here as well, but I'll just keep an eye on this little thing here. Don't have anything to say about this just yet, except that I'd want a nice little impulse wave up here to satisfy that. If we get an impulse wave there, then we'll look for the pullback here, and then as an ETF trade we'll look to go long at that point. But I don't have all that set up just yet, but because we've got 5 waves here, we'll have a correction and then we're going up further at that point. So that's the that mining side of things. So looking quite good here for iron ore and the energy sector. So wanted to have a look at I can do that for the other one. Okay, so the reason for looking at the energy sector here is you can see that it's quite, I understand you could label this differently coming up here as well, and this would also have the gas in here as well, so I'd imagine. So I'm still trying to figure it all out. XOM here, it's big on the gas, so I know XOM should hit just over $100, and that'll pull back to $88, $85, and that will be the same here as well. I think we've got one more little move up here for this top to come in play, and then this will pull back here and then move off again from there. This could be counted, all of this could be counted differently, so we're not really worried about that, but you can certainly see here that this is well, even coming back to this point, as I pointed out last time, that this here is in 3 waves, so it's a corrective pattern, so we'll be taking out that top. So we haven't taken out that top yet, that's way up here for that. This rest of this trend here, whichever way you want to look at this, is 1 and 2 and 1 and 2 and 1 and 2. You could bring wave 1 all the way up to here too on this one, just put that wave 1, 2 here. Either way you look at this, this is all still heading higher, and that means, well, if that's going higher, then we should be seeing crude oil head higher as well. It's just currently giving us a little classic trading levels pattern at the 1150, the halfway mark, which is important. Well, you can see it here, so halfway between 10 and 13, Fibonacci sequence of numbers. Look, it's possible that this could get ugly here. I mean, from this top here, we could look at this as an A, B, C here from an A wave, all the way up for a B wave and all the way down for a C wave. That's possible, but I can't see that happening when those energy stocks that are producing this are pushing up that high and fast, So what I'm going to do is, we've got 2 very small positions in here with the stop out of the way. So even from this point here, we've got 1 and 2 here, and then we've got 1 and 2 and 3 and 4 and 5 up here for the 3rd wave. 4th wave pulling back to the 4th wave of 1 lesser degree, that can come back here further. Once that's, this is just, it's doing everything that it should do. Markets push up above big numbers and they get sold off and they get hammered back down, and the value buyers will come in, and and because they can see that the trend is still the trend, and this will push up a little bit higher. Once that pushes up there, we're also going to see this check back again as well here for this, before moving up higher if that's going to be the case, you know. So we just need to give it a little bit of time here. We've only got very small positions on here, and yeah, just sort of edging into that. So I can certainly see this could be counted in lots of different ways, but the point being is that you know, this is a pretty good case for building to the upside. That's an impulse wave. That's an impulse wave. This is just not finished yet. This little 1, 2, 3, 4, 5, it's just not finished yet. So we'll get another high above here. So if you wanted to get out at that point, anything above that, you can just get out, take profit at that point there if you like, because it will correct back here. We're going to be flickering around here for a while. It takes a while to get through an old high, but it will all happen. It's all about the 1150 here on this CFD platform. Rightio. So natural gas. So I'm bullish for natural gas, just not sure where we are really. We've got wave 3 and 4 here, as I've mentioned zillions of times, and then we've got 1, 2, 3, 4, 5. I've counted that all conservatively, and I'll put wave 3 there. Now this wave 3 is not very much higher than this one here, so I kind of wonder if it's the end of this, or all of this could, you know, I could extend this out further. This little move here, it makes a very nice little A, B, and C pattern here. Now, it could come a little bit lower here. There's 5 waves here, 1, 2, 3, 4, 5. There might be another little move down here, and there may not, but I just sort of see it moving up at this point. We were going to go long at support on the 900 here, and then on here, but we could probably also just sort of wingle a position above here somewhere. So above this, let's just check on this. Let's narrow down this situation. So that's going to be the resistance at that point. So that's all good there. And then what we can do, we can look at our levels between 8 and 9. It'll just be the Fibonacci numbers 1, 2, 3 to make up group 1, and then 5 the midpoint. So this is the number that we'd be looking at. Close enough. And then we've got 8 there. When we talk about 8, we talk about group 2. So I think that we could get in an earlier position. Just remove that. We don't need that now. We know that we'll breach that trend line if we get to 8.5. So what we could do here is simply just look for a classic trading levels pattern sitting here. All we need is that first high above the level, and then we can look to go long at that point. So we'll just copy that and put that there. Put it on the second high here for that. So really it's just this pattern here for this. So at 8.5, the arrival, the reaction, the first high above the level, the ABC, this is just the standard pattern. You know, this is the most common pattern out of all of them. So a market at a price point, this price point through here, at a price point, this is the most common pattern. I just sort of narrow it down to 3 patterns. If it's going to have a correction across the level, or really it's just migrating from being resistance to support and continuing on, and you would look at this as a continuation pattern. But this is where we're going to enter here. Well, that's the high. I've got it at the second high. You can refine it further at that point. So there is this pattern, and then the next pattern is this one here, where it doesn't come below the level. It kind of just like walking upstairs kind of thing. But the top here and the second top is important, because you want to buy new highs. You want the market to prove to you that it's actually strong. Buying lows, well, catching knives is it needs a skill set. And the other pattern that can happen at the level where it doesn't stop over here, it just burns straight through here, and I just call it the overshoot pattern. But so it doesn't stop here, but the distance above is normally the distance that will swing below, and the line or the level, the price point here, will become the balance point as the market vibrates across this level, and eventually you'll see it sit on this as support, and then you can use that high and that high and that high, and off you go again. So they're the sort of 3 basic patterns that can occur at a level, and they'll also keep you pretty safe as well. So this is a dangerous situation buying here, but we'll be getting support on the 50%, 60% here, so that's going to be important. We know that the 5 is important. Looking through here, it's got, you know, it's got a bit of gravitas in there, but I just don't know what the bigger count is, because if that's 4, then that's 5, and that's 3 there. And then if that's 3, then we'll be coming down here for wave 4. So we can come lower here. So if you don't want to put a full trade on here, and you're a bit sort of nervous with that, we'll just just do half a trade or quarter of a trade and you know, leave it at that. So that's that. And yeah, this wave 3, I've got a feeling it should come higher, you know, but anyway, we'll see what the market gods deliver. Over to copper, and this is the ETF here. We have one little position in here. It is possible for this market to have one more low in here and then come up. So we've only got half a position in here, a quarter of a position. So you'll need to hold that through that, and we'll peg that low there in place if need be. But the other market, the futures market, is kind of suggesting that we have this wave 4 in, but it's not done and dusted just yet for that. Okay, so before we look at the copper chart, I just wanted to have another quick look at the emerging markets ETF, the DWO, and these are some of the constituents within this. And the thing about this here is it's very much like copper. So this is a weekly chart here. So if I move this over here, this is a monthly chart for copper. So this one's weekly, right? And this one's monthly. So here for copper, and even though this is high grade US copper, the LME copper will be the same. So the A, the B, the C, the D, and the E wave, and then an impulse wave to the upside. Okay, so it's the same for the emerging markets. So the A wave, the B wave, the C wave, the D wave, the E wave, and then up for one. We've pulled back for wave 2 now. And what we're seeing in, you know, say like Alibaba and 10 cents and all those sorts of things, we're starting to see them bottom out in line with our call on the stock market. So I've got a feeling that we're sort of ready to change, you know. And if this pushes up into wave 3 here, well then copper's going to do pretty much the same thing as well here. Now we can view this as a wave 4 setup here. It doesn't really matter. Point being is that we've got a lot further to go up here for all of this. So anyway, with that, just sort of shooting the breeze on out of left field here for that, because I think it's kind of interesting to bring markets together. So with this one here, we're just going to dive into the 100 tick area here and check on that. So 100 ticks is where we've been. So we've been coming down here and we're thinking to ourselves, you know, this move up here could be a wave 4 and we can have one more move down. But, you know, when I move, we've got 1, 2, 3, 4, 5 here. We have this as the A wave, the B wave, and the C wave here. So we thought, okay, well, that's cool. If we take that top out, if we take this top out here, well, then we've probably got something else, you know. So then I was looking at this as 1 and 2 and 1 and 2 here. And moving up, we still could have this as an A, B, C for the A wave here, the B wave here, and the C wave here, and we come on down from this point here. But that said and done, we'll just allow this to play out. We've got one position in there, and we'll keep the stop out of the way. I could count this in 2 different ways. I could count it as the A wave, the B wave, and the C wave down to this low. We're done and dusted. But I'll just give this another session, and we'll pick it up. But if we see anything that's in here that's positive, then we're going to bring this down here, and we're going to build in over here, because if that is correct, then we need to be, this will be the third of the third of the third, so we'll be pushing up from that point, and we need to be building into that. So anyway, we don't have enough evidence to call it in just yet, but looking okay for the upside, but we just need that evidence. The nickel is a little bit fickle at the moment, because well, we know that we've been through this massive short squeeze here at the LME, and God knows what they've done here, but I've just been looking at this as the A wave, the B wave, and the C wave down here. And I know that this all here could be wave 4 here, but it's such a big wave 4 compared to this wave 4 in terms of height. So I'm thinking that we've probably got the low in here, and we just need some evidence. So we can count this up as 1 and 2 here, 1, 2, 3, 4, 5, 1, 2, 3, 4, and 5 the third wave, fourth wave, and there's 1, 2, 3, 4, 5 here for this. So it does appear we've got 5 waves here. I don't have 5 waves in here. It's a little bit hard to read, but this looks like a 3-wave thing there. But we do have, it could be an A wave, a B wave, and a C wave, and that could be the top, and we could move down from this point, you know. But otherwise, this little move here is probably the A, the B, and the C wave to the 50-60%. I'll just, before I open, sometimes I talk too much. This is 5 ticks, so I'm just having a little look at this here, this move down here. So we could look at that as 1 and 2, then 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5, even the third wave, fourth wave, fifth wave here. So yeah, still not quite right, but I have to look at all of that as wave 1, 2, 3, 4, 5. It's such a nice fourth wave though, isn't it? Just that little bit at the front here that sort of throws a bit of a spanner in the works. But as an A wave to here, and then a B wave, and then 5 waves down here for a C wave here. So that's 5 waves and a correction, and 1, 2, 3, and this is, so it's still got a little bit further to come down on this. So let's just go back to the 100 ticks here. But the good news here is that if this finishes off here as 1, 2, it'll be, anyway, it's got to come down here further. And then we'll just see how it builds over this side, you know, and because we want to build in over here, keep building in over here and at the top here, if that's going to be bullish at that point. So it's a long way off yet, but anyway, we're building a case for it. But we just need to collect the evidence, and we'll move and act on evidence. So this is what's the name here? The uranium URA ETF. So here I'm thinking we've got wave 1 here and well, wave 1 here, an A wave, a B wave, and 5 waves down as a C wave here. A little bit sharp for a C wave, but we do have a nice clean 1, 2, 1, 2, 3, 4, 5 for third, fourth, and 1, 2, 1, 2, 3, 4, 5 for third, fourth, fifth. So it counts down nicely as 5 waves. You know, if it was going to be a bear market, it can go from this top here to this low back to the 50-60% retracement area there, and then fail at that point and go down further at that point. So I don't know that yet, and I don't, you know, the uranium market's pretty, I mean, it's pretty small in its own way. You know, there's certain users of it. You know, to put a uranium plant in is very expensive. France have done a good job. Japan are the biggest users of this product. But yeah, anyway, this is looking good for another little move up here. So we've just been edging into it. You know, look, to be honest, I can count this up here as being corrective or impulsive, so it doesn't really matter. But the way that we've been looking at it, so just from this one here is 1 and 2 here, a nice third wave really, because it's nice and long. You know, it's got nice legs about it. You know, it's nice. It's got that third wave look about it. Is that wave 4 finished yet? Well, I don't know, but stochastics are pulling back and suggesting. So we'll get this up to here. You know, if you wanted to take profit and get out, well then that's the place to do it, up here, okay? But next step would be, this is $20, of course, and then we've got major level 2, then we've got 1, 2, and 3 here that make up group 1, and we've got 1, 2, 3, and then 5. So the normal thing is that if we get support with the classic trading levels pattern on top of group 1, then we'll push up to the 50. Now the market could still fail up there because it's close to the 61.8%, and markets just love getting to big fat numbers, so it could do that. So we'll just need to see what the count looks like at that point. But yeah, so we've got one position here, half a position, quarter of a position anyway. Got it to break even. We've got this one in here, so we'll be able to get to that to break even. So like if you want to take money off the table, then this box is the place to do it. If you're going for the long haul and you know something that I don't, you want to stay in the market, well then we'll probably look to, I'd like to add here, but because of the boxes here, I mean, I would normally add here, but I might need to wait unless I got some other information, because we'd need to get this here. This 25 is the medium level, and there will be some type of correction there, and the next trade can't come until we've got that point there. We might be able to buy the pullback depending on what the pattern looks like at that point in time. So we could buy back a pullback here, just depending on how it all looks. You know, how is this a third wave here? Can I extend it out? Can I look at this as 1 and 2 here, then 1 and 2 here, and maybe even 1 and 2? It looks like a B wave here. Anyway, this is a bit messy in here. So some things I know and some things I don't. But anyway, we'll see as it unfolds. You kind of most of the time be able to pull it together and piece it together. But anyway, that's uranium. That's where we're at the moment. And I think that's it for the commodities. Yeah, that's just BTC. Alrighty, that's it. Thanks for tuning in. Much appreciated. Cheers.